All right, everyone, welcome back to Money Show's Virtual Expo. We are pleased to welcome Zac Mannes, Senior Analyst, U.S. Equities, ElliottWaveTrader.net. Zac is co-host of the Stock Waves and Mining Stock Service within ElliottWaveTrader.net, providing wave alerts and wave setups on individual stocks, as well as the miner's model portfolio. He also co-hosts the site's weekly Beginner Circle webinar for new members. One of the founding members of the Elliott Wave Trader site, Zac began working in finance as an investment advisor in 2008 and adopted Elliott Wave theory. Zac, thank you so much for being here. It's all yours.
Thank you, Mark. Just one quick correction. I didn't catch that in the bio. On the metals, miners, and agriculture service, we actually shifted to a wave setup model rather than a model portfolio similar to stock waves. And I'm going to talk about that of how we present. But one of the things we saw with that was that there were so many initial entries when we started back in 2015 for our mining stock service that we weren't adding new positions because we were just babysitting those, and it was harder for people to like jump in later on. So we went to a wave setup approach. Anyway, we'll get there in a minute. So what I wanted to talk today is about how we use wave setups, which are a practical probabilistic application of Elliott wave structures that we see, and how we use those to find rotation opportunities. But before we jump into that, I thought it's important to give a little bit of context to what we're talking about with Elliott Wave. And obviously in a 30-minute webinar presentation, I'm not going to have time to go into a lot of nitty-gritty detail, but I will put up a QR code, so get ready to snapshot that, or Mark can share it later. That gives you a link to our free education center on ElliottWaveTrader.net. Basically, Ralph Elliott back in the 1930s and 40s developed a system of analyzing market sentiment and chart patterns called Elliott Wave. And he observed that things advance most of the time in motive waves, which consist of 5-wave structures, and then retrace that advancement in what he called corrective structures, and usually those are labeled ABC. So sometimes the trend is down, but usually you're talking about a motive wave is going to be a 5-wave move in the direction of trend. A corrective wave is going to retrace that advancement. Now, those motive waves can further divide into impulsive structures, which are probably everybody's preference, and also diagonal structures. They're both 5-wave moves, but one of the things you can notice here is that you usually get deeper retracement and not quite as much advancement, and you can overlap inside of the 4th wave with the top of wave 1, which isn't allowed in an impulse. Also, all of the subwaves, including waves 1, 3, and 5 in a diagonal structure, can be 3-wave ABC moves, even though the whole structure is a 5-wave move. The other thing to note is that Elliott wave is fractal. So when we look for a 5-wave move up structure and an ABC retrace structure, a lot of times that can be the 1-2 start to something bigger. One of the big advances that Avi Gilbert brought to the world of Elliott Wave when he started the ElliottWaveTrader.net was what he calls Fibonacci pinball. And that is a way of using the Fibonacci extensions. Once you have your 1-2 structure, extending your Fibonacci extension tool off of that wave 2 bottom gives you some very precise regions to target for the subwaves within that 3rd, and then for the rest of the 4th and 5th. So we know that the subwave 1 inside this wave 3 is going to come to either the 382, the 50%, or the 618. Then we look for normal Fibonacci retracements for the wave 2. And then our wave 3 is either going to go to the 100% of the 1, 2, 3, 6, and then come back to the normal guidelines we look for a 4th. And then that 5th wave is going to either go to the 1382% fib or the 1618% fib. Then we look for normal guidelines for the larger wave 4, and then another 5-wave move up to either the 1764 or the 200% extension for that wave 5. That happens with such regularity that we can really set our clocks by it. And we know right away, if we don't get 5 waves up into this zone, then we can expect that something else is probably playing out, and this isn't a clean 1-2 setup. So we look, well, Elliott wave works by degree, and we're looking for agreement in the wave structure at all of those levels to give us clues. And so for a setup, we might be focusing more on this entire move as the wave 3, but we can know early on that there might be some issues with it based on the structure, the subwave structure off the low. Here's that QR code that takes you to the education section with a lot of free materials at ElliottWaveTrader.net. Leave that up for just a minute. And then before we go on, I thought it's really important before we start talking about some sector rotation opportunities and some different wave setups to look at a little bit of context in terms of where we are in the broad market. This is Garrett's S&P chart that goes all the way back to the 1800s. You have some things in here labeled as far as historical events with Gold Rush, the Civil War, the Panic of 1873. And we have a very, very large move up into the Roaring 20s, which was a fifth wave of this larger super cycle wave 1, then a Wall Street crash and the Great Depression. And this is right around the time between the 1930s and the early 40s, when R.N. Elliott started to develop Elliott wave theory, and at that time predicted at the time he called for a 70-year bull market in stocks, and we have largely filled out most of that. We can see the subwave structure inside this super cycle wave 3, filling out a cycle 1-2 into the end of World War II, and then a cycle wave 3 all the way up into the tech bubble. The nominal higher high that we saw in the market before the housing bubble burst, we're actually counting as the B wave in a wider flat for the cycle degree wave 4. And then off of that Great Recession low from 2008, 2009, we can count 5 waves up complete, with the most recent larger correction being the COVID-19 pandemic in 2020 being the primary degree wave 4. So there are some structures that we're looking at in different index charts or different sectors that allow for further extension. But we're already, in terms of the risk skew in the larger context, it is important to note that we are in a very, very extended move and an extended fifth wave of that extended move that can be topping a larger super cycle degree wave 3 in the near future, with a fourth wave that would be the same magnitude, at least in terms of the corresponding degree, to the 1929 crash and the Great Depression. Now, Elliott wave says a lot about alternation and things like that, of where fourth waves are going to be different from the wave 2. One of the things that was unique about this crash is it was most of it played out in a very short period of time as kind of a more straight down sharp correction. So one of the things that we're looking for here is maybe a wider flat correction that takes a lot longer to fill out and maybe is not quite as sharp and severe, but still probably going to be larger in overall magnitude than the tech bubble burst to the bottom of the Great Recession, and certainly larger and deeper than the COVID-19 crash. But it doesn't necessarily have to start as a significant crash. So one of the things we do, this goes for the metals and miners service also, but in stock waves, the big features, in addition to the ongoing Elliott wave analysis of hundreds of individual stocks and of sector ETFs, and the ability to have robust searching and make requests for one-off analysis, is our presentation of wave setups. And these are a practical, very specific tradable application of Elliott wave. And you'll see how we present them, that it really works for lots of different trading styles, people who want to trade options, people who want to sell options, or just, hold long stock and maybe sell covered calls or things like that. Allows for a lot of the different methods of capitalizing on it. So here's a good example. This is from back in November 2023. We were noticing a larger structure bottoming on Alcoa. So we have a 5 wave up move. For a primary degree wave 1, a nice big corrective ABC retrace into an ideal fib support level, either the 50% or the 618, with 5 waves down inside that C wave completing. And while it did not have the cleanest 5-wave up structure off of that low, it was starting to move outside of the trend channel that made it less likely that it was going to get further extension lower. And so we set this up as a long wave setup. And when we do those, we assign a target. In this case, we're looking for just the target of the subwave 1 on an M time frame that stands for months. So thinking that this move would take less than a year or more. But looking for that target of 70, which is one of those first of the Fibonacci pinball levels that we look for inside the start of a larger primary move. And support was given of 25.40, which was right about where it was at the time, and an invalidation level of just under the low that it made for that primary wave 2, and a first resistance level of 30. Now, that resistance is important because these wave setups are a snapshot in time based on what we saw then from an Elliott wave perspective. And we don't go back and change them if it has a chance to start moving in the right direction or invalidate. But once it gets to that first resistance level, then we do an official update of our wave setups, and we'll analyze the structure that it made up into that first resistance level, and if we feel like we're still on track. And so many of our wave setups get numerous updates, and usually when we get to that resistance level, we're able to also raise the support and validation levels. And sometimes, on rare instances, we get to a target and there's an immediate secondary target as long as we hold the new support. So sometimes if we get to a target level and that's the first target is reached, then we can assign a secondary target. But we don't go back and revise invalidation levels or things like that to the downside if it looks like it's going to drop lower and not getting to the resistance, because that isn't good for risk management. So some people can separate out the pure Elliott wave analysis that we do on some things from the wave setups, but we try and keep those two things relatively siloed. So here we can see an update as it is hitting another resistance level. So this is saying that the setup for Alcoa AA is being updated because it is hitting the resistance level at the 42 region. But what was discussed here is we'll give an analysis of what's going on from an Elliott wave standpoint. And this wave 1 shifted from filling out potentially as an impulse, where it would be a much quicker move, to looking like a larger diagonal structure. So we had an ABC move up completing into a resistance level and allowing for a move down into support much, much lower for a wave 2. So this was a move that was up 70% from the initial wave setup. And so while we're not making specific trade recommendations, we do preach a lot of sound risk management. And so, we're probably pounding on the table a little bit for people to at least move up some stops and trim and or sell some covered calls or something ahead of a probable larger retrace as that wave 2, even though we were not yet at our larger target. So fast forward to a more recent chart. This is from the end of February, and we did get more of that wave 2 that filled out. When we did that, and we're holding support in here into August with a move down for the wave 2 and a move off the low and a corrective retrace holding a higher low, we at that point changed the original wave setup from an M, which we said stood for months, to a Y wave setup, which stood for years, as a longer term, meaning that as the playing out as a diagonal was going to take longer than the more swift impulsive move to get up to that target in the 70s for the parentheses wave 1. But then we added a new wave setup that was a new M move for months, focusing just on this C wave of wave 3 inside that diagonal structure. So that's how we kind of use things at different degrees and do make some changes over time. Before I go on to do a few other examples of wave setups, I wanted to use Alcoa as a segue for a quick materials tangent. I've talked about ratios before in other presentations. Maybe we did it for a money show or a traders expo, but we do sometimes apply Elliott wave structures to ratio charts, with the caveat that ratios should really function more as oscillators over time and not long-term trending charts. But this is a ratio chart of the SPY to gold. I do this instead of SPX to the GC futures because my futures contract rolls and it starts to get skewed. So SPY and GLD don't roll like the futures contracts. But we can count 5 waves up off of a 2011 low in the ratio, which, as we know, was a pretty significant extreme in the price of gold, and possibly filling out more of a larger retrace from that move, which could be pretty bullish for gold to either continue higher or maybe more bearish for the market or some combination of both. You know, it's important to understand in a ratio chart that you're just talking about relative strength. You're not talking about any specific direction of one of those instruments. But we also track the gold and silver ratio chart, and I see some significant performance for that as well. But in the past, I used the ratio chart as a segue to talk about XME. And XME, this is back in August, was holding a nice setup to start a C wave of wave 3. We got a nice move to a higher high, but couldn't hold reliable support as a smaller degree wave 2 inside that structure. And it since went on to fill out this wider flat for the B wave. When we last presented about this XME chart and we're looking for it to be potentially bullish, and starting this bullish move, we did on our Thursday webinars and stock waves, we usually do a deep dive into a particular sector and look at a lot of the key components. And one of the things that we saw that was pretty striking in the XME sector at the time was that the strength was certainly not going to come from some of the main components of the XME sector, which were in the steel miners, that a lot of those charts looked rather weak. But one of the standouts from that deep dive was Newmont. And Newmont was filling out this is February of last year, was filling out a rather large ending diagonal for the C wave of a larger primary degree retrace, very similar to what we were looking at in Alcoa before, and was just shy of a 618 retrace. So once that started to turn up a little bit off the low, we had really, really good risk reward for the start of a similar large degree wave 1. And so in our metals and miners service, we set up Newmont as a wave setup, targeting the 58 region for that parentheses wave 1 of the larger primary degree move starting. In this case, thinking it's a primary C wave as opposed to a third. This we did as a long-term Y move, one because C waves can easily be diagonals themselves, so it was possible for that to take longer. And the invalidation level was just under the low that was made, or just under the 618 retrace. And the support level was in the 30 region, as allowing for a normal retrace from that initial move off the low. So fast forward, we hit our 58 target back here in October and updated our wave setups accordingly. We did not assign a new higher target for that wave 1 because as we had been updating as we got to resistances along the way, Newmont, instead of filling out 5 waves up for this parentheses wave 1, looked far more like an ABC structure. Now the alt count, and one of the criticisms that Elliott Wave gets is that there's always an alternate count. Garrett and I really try hard to avoid putting alternates on our charts. And when we do, we want there to be some overlap in structure. So it's not just to say, well, there's a bullish count and there's a bearish count. So the alternate here is the same ABC up, but instead of it being all of the parentheses wave 1, the green here being a little bit more bullish, is suggesting that that could just be a larger A wave of an even bigger wave one. And then instead of this being the wave two, this could be the B wave of an even bigger parentheses wave one that could get up into the 70s. But we did fill out the retrace we were looking for, and so added yet another wave setup for Newmont, as this has been filling out a nice move off the low. Even though we're leaning more to it being a diagonal structure, the risk reward for this to continue higher long term is still pretty fantastic. I mentioned the gold and silver ratio. So I brought that up here. We did get nominally higher. Instead of filling out as an A, B, and a C for a Y wave, this counts better now as a 1, 2, 3, 4, and a fifth of a C wave. But we still held under getting a higher high, under the 100% retrace for this as a wave two. And if turned down again, still suggestive of silver being able to outperform gold. So when we look at the two charts, it seems a little bit unreasonable to assume that gold and silver could go in opposite directions. But when the ratio needs to trend down, it just means that silver should outperform. And we have the move that we've been tracking in gold off of the summer lows is a C wave of a larger parentheses wave three. And so that should continue to get more of this fifth wave higher. It got more of the fourth wave we wanted to see and is working on this fifth wave up that I would love to see it hit 3054 or into the 3100s. But then it's going to be due for a larger ABC correction as that parentheses wave four. Whereas silver dropped lower into the August low for its relatively same B wave, and either has to count as a very, very muted and truncated parentheses wave three that topped back here in October, or this entire structure is a 1-2 start to a much more extended version of the same move that gold already filled out. And when we look at a lot of individual names in our metals and miner service, we do see a lot of potential for some of the smaller junior miners and a lot of those that focus more on silver to have good structure to continue to outperform. So we did add SILJ as a wave setup back in August, and that has been starting nicely as a wave one of this wave three off of that low, and has gotten a couple of updates. Dropped a little bit deeper than we wanted to see for a wave two, but is turning up very, very nicely from there. Here we're looking for a fourth wave, but since then it seems more probable with the way that this dropped a little bit deeper that this actually filled out 5 waves up into that normal fib zone that we were talking about for Fibonacci pinball as all of the wave one here, and that this is all of the wave two, and it's working on a 1-2 start to that wave three. Given the current market environment that we were talking about and the potential for a larger degree correction possibly starting, we have spent a lot of focus on some short sweat setups as well, in addition to those things that look like they can power the market a little bit higher for further extensions. One of those short wave setups was Adobe. This is back in July. We saw a probable top as a larger B wave at a lower high, and then a possible 5-wave move down and a corrective bounce to yet another lower high. And we're looking at that as the start of a possible third in this larger primary C wave of a cycle degree fourth wave starting, or fourth wave in progress. So we set the invalidation level as the 601 level, the first resistance down here in the 500s, looking for that wave one of the three, and the support at the high that was just made for that wave two at the 580.50 level. Of course, it says that it's a short, and then the target longer term was down in the 311 region. So since then, it filled out a wider flat for the wave two, but did not invalidate. And then into earnings, I said we mentioned we do a lot of analysis on the day of earnings for things that report after the market closes or before the market opens the next day. And so sometimes we post those as a very specific directional call. It's different than a wave setup, but saying into the earnings move, we had yet another move down off of our larger wave two, and a corrective retrace to yet another lower high. And this looked like a good setup for a nice drop. Was not expecting it to get all of the continuation of the move that it got right away, but it was a very pleasant surprise. But where it started to hit on based on fibs, it looked, because it didn't get more of a 1-2 start to the third of the third, it really looked like it was going to fill out more as a diagonal structure. And so when we were in this 400 region, we updated that we were looking for a larger bounce. I think this B wave might have topped, and we have a possible 1-2 start to the C wave now. Another short setup that we were looking at that's very interesting, and then I'll try and leave some time, Mark, for questions, because I know we're running up to the end, was AMD. AMD had a very, very clear ABC corrective bounce into resistance region for a wave 2 or a B wave. So it made sense to look at it as a short setup. At the same time, we were seeing some potential for NVIDIA, AVGO, and TSM to try and fill out more of diagonal structure. So here we have NVIDIA. We've filled out deeper than ideal for this wave 4, but it did hold support. So even though we were more bearish on AMD, this only got a corrective move down into possible support. So we were looking at the potential for NVIDIA to try and head higher. It did get a move up to a nominal higher high, which ran the risk of this being all of that fifth wave, but then held a wider retrace and was trying again, but couldn't hold this B wave here. But we were looking at the similar structure in AVGO, which also failed. But we had added SOXX as a short wave setup recently at the end of February, because of the B wave structure and a possible 1-2 start to the C wave down that we were seeing on SOXX. But SMH, that was more heavily weighted to those three, NVIDIA, AVGO, and TSM, didn't post it as a wave setup because it wasn't as reliable, but we were doing this as kind of a pair trade, that we were scalping potential for that higher high in SMH while being short SOXX. And we certainly saw how that filled out. If we have time, I can talk about MP, but I have a couple other slides as well, but wanted to leave some time for questions.
All right, Zach, thank you so much. Mainly questions that have come in so far are kind of market related and outlooks. People were asking target price for S&P 500. If you have any comments on silver and any stock picks that are set up now, or short-term, mid-term direction for gold and miners.
So gold and miners looking higher, except we talked about that gold itself is getting closer to the end of that move. The S&P is at risk of starting to confirm a possible top. It's due for a bounce. If that bounce gets over the 6,050 region, then maybe that can be the start of further extension towards 6,400 or higher as another extension. But that's a key resistance level that I'm looking for. There's some things that we're pretty bullish on, but the market in general is not really one of them, but I am playing for a bounce. And if we get a nice move off of this low and then a corrective consolidation to a higher low, then I'll scalp that even more towards that resistance region. And then if it can start to get past the resistance region, then I'll continue to look for more things that can continue to fuel that rally of further extension.
All right, excellent. Thank you so much. Another question came in. They say once they identify the wave 1 through 5 and the A through C corrective pattern on a price chart, what are some strong indicators that the price will reverse or continue? And how do they decide whether to keep riding the trend or go against it?
So, I mean, let me get to Tesla, because that's a good example. So from December, I was looking for a B wave retrace. It's not the same as 5 waves up and 3 waves down for a wave 2, but we had a move up here, and we're looking for an ABC retrace into the support region, which is it was a massive move up in the start to this parentheses wave 3 off the 2024 lows. So the normal Fibonacci region for a retrace was pretty wide, going from the 300s down to the 220 region. So as this was filling out, we were following the initial move off the high, a bounce into January. That was a setup for a specific move down into the lower 300s. And from there, is filling out 5 waves down. So that's where you're looking at the subwave structure. And so you have the proportions that we look for normal proportions for the C wave, as well as looking for 5 subwaves. And we had a move down into the 300s that still looked like just wave 3. We got a bounce as a wave 4, and then we're looking for one more low into late February down to the 315 to 302 region. And then it started to extend beyond that. So that was where, instead of ending at the 300 region as an A wave and getting a bigger bounce, it decided it just wanted more of this B wave right away, which isn't the typical thing that you can rely on. And probably I prefer to have more of a wider, gentle, flat structure than such a sharp drop. But Tesla did come right down to a 618 retrace and is trying to reverse off of there. So the structure counts as a sharper ABC down, as a more violent, quick drop. But it is at the larger degree that is in the target zone. So now we're zooming in, looking for the first signs of reversal. We know approximately where our 1, 2, 3, 4, 5 inside the C wave should land, if that's the move that's going to play out. So then we can zoom into this structure and we can look for the 5 wave move up structure in there. And we can even zoom in on that small lowercase parentheses wave 1 and say, okay, we need to see 5 waves up to, towards the 250 to 280 region for that to be a reliable move off of the low that we just hit yesterday or overnight.
All right, Zac. Well, that puts us close to time. Any closing remarks or any last minute charts you want to see or slides?
I don't know if I have time to talk about any other charts, but you can find me on X at Zac Mannes, ZACMANNES. I put out some good information. Some of it's teasing and promotional. Some of it's just stupid memes, and some of it's actual real analysis. But and we also offer 15-day free trials for stock waves and the metals, miners, and agriculture service. And there is a nice discount of 25% off of the MMA service when it's combined with stock waves. There are also other discounts for paying quarterly, and Tom can set you up with all that stuff.
All right, excellent. And to the audience, look for that link, the QR code in the chat. I did post that. So again, Zac, thank you so much for being here, taking your time out of your day. We appreciate it.
My pleasure. Thank you, Mark.
And a big thank you to all of those in attendance. We were speaking here with Zac Mannes, Senior Analyst, U.S. Equities, ElliottWaveTrader.net. You're watching Money Show's Virtual Expo. We have one more day for you tomorrow, so be sure to log on, reach out to any friends and family members, tell them it's free, register, and they'll get some valuable content just like they saw here today. So thanks again. We'll be back with you shortly.